The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
That's right, dudes and dudettes. It's time for another excellent edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft koala bear of Wall Street, David White, and the Power Trading Hour from TFNN, your headquarters for technical trading and investing. And today we could ask for more of a Chinese curse. May you live in interesting times, because this is we've got a market out here that it's I'm going to call it the Lucy market. You know, every time Charlie Brown would get ready to kick that football, Lucy would just pull it away, and as soon as the longs think they have it all teed up, poof, it goes away. As soon as the shorts think they've got the bulls down and ready to be eviscerated, there goes the football too. And I'll guarantee you, if I took probably an 8 a.m. poll of what everybody thought we were going to do, I bet we probably have half the people out there saying that we were looking at 1900 on the S&P cash by the end of the day. How can you have a 40-point move in Apple and be off? What are we off? We're not off. We're up, 1.5 points on the S&P cash. I think fair value is about +3. So it is what it was. But it really didn't surprise me a lot, and that's because of the incredibly light volume. And I know that we've had light volume down, we've had light volume up, but it is what it is. Let me put it that way. So we will continue on, but just looking at the volume today, we had incredibly strong first 30, 35 minutes of volume, and then it pretty much tanked. Of course, about that time, we found out about 3 soldiers that had died. They were Russian, probably Spetsnaz, special forces that had been put in to the Ukraine to stir up trouble, but of course, undocumented. That's what we're going to call them, undocumented warriors, otherwise known as spies. But I don't think spies is probably just with the PC crowd. That wouldn't be good. So we'll call them undocumented warriors. At least 3 of them died in getting them pushed out of some of those buildings in the Ukraine, and everybody started freaking out a little bit, and the market kind of rolled over. I suspect we would have rolled over by earlier afternoon. Would have made it a little bit more dramatic. There just were too many people, even before we hit that number, starting to hit the sell button. And a lot of shorts in the market. It is kind of tough to hang on to some of these, but to me, I think that we still have a market that doesn't have any juice to the upside, even though the market becomes. There was a term in Jesse Livermore's book for reminiscence of a stock operator, and that is thimble rigging. And I don't know exactly what it means, but apparently every time someone was rigging the market, that's what that was called back in the, I guess probably about 1920s. It was thimble rigging. I'll have to look that up. Maybe it's actually something, and maybe it means something. But as we go to basically unchanged on the day at 1876, volume really kind of tapered off later on, and 2 billion shares as we start, a lot better than some of the incredibly low volume days we've had before. But a lot of volume very early, not much volume after that, volume starting to slightly pick up. and we'll watch it for the rest of the day to try to get some sense of the path of least resistance for this market. But every time, like I said, we're going to call this the Lucy and Lucy market. I think it was always that it. Your big buzz, please. We always have fun here at TFNN, even when we don't. Anyway, we're going to go on to some news here. It is a beautiful April 24th. We'd like to start with a little history. Then we're going to get into earnings. In 1968, IPO mania was in its full fury on Wall Street. Does it seem like there's nothing new under the sun, my Horatio? Anyway, the stock of the day in 1968 today was the National Student Marketing Corporation, and it went public. A company which signs up undergrads to flog vinyl LPs, employment guides, posters, and other slock on college campuses is a huge hit, offered at $6 a share. The stock surges 133% today in 1968 to close at $14 or 100 times its earnings. Within 2 years, the company founder, Court Randell, is on his way to jail for stock fraud, and the company stock trades below $1 a share, delisted shortly after. So always an interesting thing. And, of course, today in 1990, Michael Milken, the Junk King Bond underwriting business, pleads guilty to 5 technical counts of violating security laws, was sentenced to 10 years in federal prison, served like 7.8, came out, started some foundations, been working fairly hard to go back and figure out how to revigorate himself, remake himself as not the king of junk bonds. And a lot of Wall Street was kind of written about the Michael Milkens, that kind of stuff. But since he's gotten out, he's actually been fairly a model citizen. Even though he went to jail, he came out and still had a ton of cash. So not much there. And, of course, in 1956, if you've ever wondered why they always have somebody come in and ring the bell to start the day on the New York Stock Exchange, it started this day in 1956. It started because there was a guy, Leonard Ross, who won $100,000 on a TV quiz show, largely based on the strength of his knowledge of the stock market trivia. He basically came in, rang the bell, and everybody thought that was a pretty good day and thing to do. And so now every day someone comes in and rings the bell to start the horses in this market at 9:30 Eastern time. So we'll keep an eye on it. Okay, now we're going to get to what's really going on in this market. I'm going to try to spend the rest of the segment on Apple. Probably the best description of Apple's earnings I can come up with is a saying that has been around for a while. It's called Rashomon. For people that don't know it, Rashomon is a movie. It is a movie by a great filmmaker that basically everybody here in the United States ripped off. He was a filmmaker in late World War II in Japan, made a lot of movies, about one a year for about 20, 25 years in Japan, but far superior to anything we had over here. The movies were pretty much schlock, and we have to probably give him credit for releasing and making movies much better here in the United States. The studio system really didn't reward anybody making great films, just films that people would like, kind of the McDonald's of films for a number of years. There were a few good movies, but for the most part, those were accidents. But almost all of Akira Kawasaki's movies got ripped off. But one of the great movies was Rashomon. And what the movie was about was 4 witnesses' accounts of a rape and murder, and all were different. And if you've ever, I was in a grand jury for a couple of years and actually ended up on a county grand jury, and then 1 year on a federal grand jury. They found out I was off on Fridays. That's all they needed to know, and the people were more than willing to grab me. Actually, it was kind of an interesting deal. But what you do find out is eyewitnesses can look at the same thing and see a great deal of different things. People that want to see Apple as the end-all and be-all are there. I try to find the weaknesses in business models. And so there's probably going to be a little disagreement here. But I have a feeling that there are several things that you should know that probably aren't being reported accurately. And I went back and looked at them, tried to cross-check my information, and I think these are valid points, but it's probably going to take yet another quarter to figure these out. Now, first of all, they said that they've shipped more iPhones than they ever have before. Shipped doesn't mean crap. Sold means something, and they are not selling or saying how many. And I did see at least one company on Wall Street ask them how many they sold, and they really haven't answered that question. The other thing we need to know is the ASP was $40 lower. And this is, if you know what's going on in the business model, you understand margins, you should run and not stop screaming until you're totally out of Apple. If you got lucky enough to be in it, I'd be selling it. The reason is the ASP stands for the average selling price. The average selling price is, of course, a good indication of what happens. But what that tells us, and what even Apple has said, is that they are out here selling more of the iPhone 5, the cheap version of the thing, the plastic version. But if you remember me going through it with Tom O'Brien, and I think I went through it on this show, how much lower the profit margins are on that cheaper phone. It really only costs about $15 or $20 less, but they make about $60, $70 less. Apple is a great company because it makes 65% margins on a phone. I don't think that will last. But what we do know now is with the average selling price, since they won't tell us how many of the iPhone cheapies and how many of the iPhone 5 flagships were sold, what do we know? That 65% is down to 58%. And we've done dissertations on why margins are so important. And when I put out my special report when Apple was, $900 or $697 and just hit 704, I'd warned everybody in the Tech Insider to watch out when we started looking at all the stocks that supplied Apple being in trouble. That was all based on, of course, margins and margins going lower. But we'll have to spend a little bit more time on this when we come back. But give me a call, 877-927-6648.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different future contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a free 2-week trial to Taz Signal Box. For all the details and to find out how the signal box works, visit the front page of TFNN.com.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And as we get back, we're going to try to finish up Apple's earnings here and then get to some of the rest. And as so eloquently stated in the den by John, when news breaks here at TFNN, I fix it. So we're looking at this. Now, one of the other things not a lot of people are talking about, pretty much whistling past the graveyards, are the fact that the iPads sales are down about 25%. Even with those down, and remember that's a 35% margin product, that actually makes their margins look better, even though the overall numbers are out. But here's what I think has happened. They shipped a bunch of product very close to the end of the quarter into China. We have no idea what the sell-through was on that, but a great deal of what they have there was the products being kicked out the door on and out to China. Now, again, they really haven't done a great deal for setting up new high-speed networks. Still, you thought that after they made that great agreement right before the beginning of the year, there would be a great deal more that they were going to do on really getting to work on building out the 4G networks. Seems like the Chinese communists that run the whole show, not real happy to have a lot of people out there on networks that they can't run the wire directly to their house and come and get them. And that may be a part of a political issue that Apple cannot control. But looking at some of the other results from AT&T and Verizon today, we do see that at least in the United States, that it's still problematic and they were talking in their earnings calls about losing customers both on cable, but also in the cable market. So we may have a market that's fairly saturated for new phones, especially at the high end. But that should be it. Now, one other issue that we'll try to get to and end before the end of this segment, before we get into more things, and we've got some emails here that I'll try to get to today. But this issue should bother anybody listening to the sound of my voice or anybody at TFNN. And basically, FCC is out with new recommendations that they're trying to get through that would destroy net neutrality and might severely curtail companies like TFNN from broadcasting. In fact, looking through it, there is no end to the amount of rate hikes to get streaming video and audio correctly to end users that these companies could not charge. Netflix, no matter what they raise their rates to, Comcast could come in and just say, you know what, we want more cash. They could do that to TFNN. I don't know what happened, whether or not Comcast got pictures of the president with some farm animals, or maybe the FCC guy with some farm animals, and kitty porn. But there's something going on out here, and I guess it's probably a huge balloon full of cash, almost as good as Ben Bernanke, Helicopter Ben, could throw on people. But from about 6 months ago, the FCC has done a complete 180. Basically, when you read it, here's the quote: commercially reasonable manner, which would be reviewed on a case-by-case basis. Since I dealt with these folks for about 12 years for cable companies, I will tell you that they wake up every morning thinking about how they can screw over their customers, screw up their vendors, and these aren't a bunch of really great guys wanting to make better services for the customer. They basically think as a slub that they can get all the cash from. Well, they know that didn't work, so now they're going to go to places like Netflix and other streaming services. Anybody that uses any decent amount of traffic for IPs and go after them for the cash. So it's an end run around, and you're just going to be paying higher prices for Netflix. And companies like us that don't charge anything could be left out in the cold. So I'm going to ask you, probably a little bit more after the break, to contact your senator and your congressman and tell them that you think the FCC chairman is a doo-doo head, and you don't like his horrible idea of unneutral net neutrality. When we come back, we'll talk a little bit about it. Spineless weasel, Hitler Youth, all words to describe this guy. We'll be back in a minute.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is back with another Tiger Dollar special, and as part of this promotion, not only can you receive up to a 25% bonus on whatever you spend, but you can also gain access to a 5-part live webinar series with Tom O'Brien taking place the week of April 28th. Each morning during the week at 8 a.m., Tom O'Brien will walk you through how he sets up the market live and digest the previous day's trading action while analyzing overnight markets abroad in order to anticipate what kind of trading day to expect. Each 60-minute live morning webinar will be archived by around 9:30 a.m. that very morning, so that if you can't attend live, it'll be available for your viewing pleasure on demand whenever you're ready. Tiger Dollars can be used for any TFNN newsletter or service, and they never expire, so now is a great time to lock in extra savings on all TFNN products. Don't miss out on Tom O'Brien's 5-part webinar series. Get your Tiger Dollars today with up to a 25% bonus on whatever you spend before this special is over by visiting TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
And if you want to check out some great films, I think the film I liked the best of Kira Kawasaki was Yojimbo. But if you want to see a movie that was a direct ripoff of Seven Samurais, you can see that. I think it was Seven something or other. But they actually got sued here in the United States. But all his movies at one point or another were lifted here in the United States. And, of course, several of them have been made into an homage of his film style. But certainly great movies, even if they're subtitled. But you can see how these movies in the 50s changed what we watch in Hollywood from then on, and how it became a better place. Anyway, we're talking about FCC and net neutrality, and how the FCC chairman is a spineless weasel, a skunk. And I hope that you will call your congressman and senator today and tell them that you think this is a very bad idea. Unless you want to start coughing up every day to listen, maybe we need to start charging. Probably would have to if these guys decide to do something like this, because they'll eventually get to everyone on the internet. If they can get to Netflix, they can get to TFNN. So make sure and call everybody, and make sure that today that your congressman and senator knows that you totally oppose these restrictive, draconian, and Hitler Youth ideas. We'll be on to that. Now, later on to Microsoft after the bell. Microsoft, a couple of things I wanted to talk about, but Microsoft's new CEO is likely to toss everything into this quarter and next one. I'm not going to be surprised if Microsoft trades off a buck or two. And the reason why is he is a brand new CEO. Normally, they don't agree with everything. So they're going to start closing down the things he didn't like, get rid of them, and I'm sure there's a ton of them because that Deadwood CEO that they had before was there for, 14 years doing basically everything he touched turned to crap. But it is a new chapter, and you've got probably 14 years of bad ideas that'll need to be cleaned up. For the most part, Microsoft had enough money that you're not going to find anything that cripples the company. But I would not be surprised in the next couple of earnings announcements that Microsoft trades lower for just a little bit. Why they clean up some of the books on this stuff. Overall, I think probably within a couple of days, you'll probably see Microsoft back and higher. They, of course, are going into that huge upgrade cycle as Windows XP is no longer a viable client. And they're even being able to charge people that want to continue to use Windows XP huge bucks to offer and support a operating system that they don't publicly support any longer. So don't be surprised. They've got a lot of great new stuff coming out. And for the people that say the PC's dead, I think that I've heard it at least 10 times. The head of Intel says he's heard it 12 times since the PCs came out that it was the end of the PC. So nothing's new out there either. But don't be surprised out there if we see a little bit of pullback. But I don't think this is one of these stocks that you want to be shorting. Let me put it that way, too, because I think they've got a lot of good things going on their way, and they've got somebody that's not a CFO in the driver's seat, and I think he's already done some really good things, like getting out Office for tablets and doing some other stuff. So I think he's going to push on forward. Trying to think of anything else. Did we talk about Facebook? I think I did. Did I talk about it? I digress. Okay, and let's get to some other stuff. Had, I guess, some questions in the den here, so let's see if we can get to those. What do we have? Ken in Wyoming, looking for a price on JO. Let's take a quick look at that. That is the coffee. And I've been talking to Andy. I guess he's going to be here, of course, at 3 o'clock. But I tell you what, you don't like, if you're looking at the chart, I don't like coffee here. We've been talking a little bit about one of the coffee companies that had made a very good Gartley pattern. Bounced just like it should in the Gartley. But we've had 3 days of no volume. I'll check on this as soon as we get done with JO here. But it is problematic to see JO up here going against the March 12th high with 560,000 shares. You've got two dojis yesterday, just under 200,000. Today, 151,000. No real volume or pressure back up here. No, Andy's a little nervous on it, too. I think it's JVA, which is another, if you want to get a good example of a Gartley pattern, I've been showing this off lately because it's pretty much everything in a Gartley pattern, and then that is, other than this thing retraced just a little bit more back up to the C point than I would like. I don't like these things going much past 80% of the A to B. This went 86%, but still good. But what you don't want to see is exactly what we had here. You get a bounce and you make some money. But we've had, since the low, 1, 2, 3, 4, 5 days. You want to see, or at least I want to see volume within 3 days. So I would have sold yesterday when volume did not come in. And, you had an opportunity to sell into it today. But this coffee holding company, JVA, is a good example. You had good energy on the X to A leg in the Gartley. You had light volume from the C to D point. It came back right where the gap up was with a huge volume. That day had almost 2.9 million shares on the 14th of March. So literally a beautiful Gartley pattern. But sometimes things change, and in this case, you really didn't have a lot of people coming in with volume, and that would have been the clue to get out. I didn't take the trade. I don't trade stocks with this light of volume. I like to have more than 300,000, but most of the time more than 1 million shares, especially if I'm going to recommend it to other folks out here. But not a lot of Gartley patterns out here that really looked as well as this one. And then why I showed it, because I thought it had a very high probability of coming out. So back to the question on JO, which is what is the price target on it? And the question would be more, where could you buy this thing and get the right risk reward that you're looking for? And my guess is that you're probably looking at one of these gaps down below. But now that we've got kind of a failed movement up here with JO at these light volume highs, this thing starts pulling back in. I think you could see $35 on this. I think you want to get back into these lows. Yeah, your support's probably somewhere in that candle of the 4th of April back here. And what was the high? 37, and the low that day was 35.21. I think you're probably going to get back into that candle right there if the market starts pulling back. And of course, these companies probably trade a little different than the S&P, but if we do a pullback rather strongly, I think we're probably going to see all these stocks have some cash come out of them. Anyway, you can give me a call at 877-927-6648. You can email me at path@tfnn.com, and or you can put a low in at, a message in the den. And Andy says gold and silver seem to have put key reversals on daily charts. Any thought? Yeah, I don't like the reason that it bounced. The reason it was bounced was because of the issues over there in Russia and Ukraine, and to me, those are very temporary deals. It was down on volume earlier in the day before that came out. The only real reason was the political event, and this market has shown time and again that whatever happens to Ukraine, if it doesn't turn into war within a day or so, pretty quickly evaporates. I like to see today's low tested on lighter volume before I'd be a buyer here. Frankly, I'm hoping that we get to 1175 and a giant washout where I can buy the thing back at the lows. So I'm kind of rooting for the thing to fall apart. A lot of people long probably don't like that. To me, I would love to see this really demoralize everybody and just crush the spirit of every gold long. At that point, I'd love to buy it, because I think maybe we just had a few too many people chomping at the bit to buy it last time, down around $1,200. I want some severe demoralization on this thing, and it's going to take a while. Anyway, we're going to look at some other stocks of interest that had earnings. And did I talk about? Or did I delete it? I deleted it. Anyway, I wanted to get to Facebook today. I know that we had some other people. I know we have some people that like this stock long. And I wanted to give one more warning to Facebook owners of the stock. And that is, I can't tell you that you won't see a test of that 72 high. I can tell you this is one of the most dangerous stocks to have a hold of right now. If you want the links, I'll be glad to send them to you. But the CFO resigned. And, of course, he says he's going to go do something with healthcare. I've seen a lot of descriptions in the den on why it was fine. I said yesterday before he ever resigned that they had issues in accounting. And I probably a little issues with the truth. Some people have called it fraud. And I haven't seen that denied by Facebook, the company itself. The video still resides on YouTube. You can watch it. I'll be glad to send you the link. If you want to read about it, I'll be glad to send it to you. We've talked about it on this show before, but to me, it looks very, very suspicious that we've got the CFO leaving, especially when we know that there is what they call like fraud, and that is paying for likes and some of the other issues. Now, also, I've seen and continue to see things in the ad space, ad world, those kind of things, where a lot of advertisers are talking, and they're more looking at Facebook like a lawyer, where you just get these bills for billable hours, but you really don't see anything. So I don't know if they're really not doing anything. Facebook is just taking cash and cashing the checks. But there's a lot of people in the ad space not liking Facebook kind of the way you would want. But the question I would have was, and if, since this is so blatant, and I don't know the legal hurdles to actually be criminally charged with fraud, but everything I see in this makes me think that Facebook could be charged criminally with the way that they do some of the things they do. And, I know that the CEO is good friends with Obama. That counts for a lot in the Justice Department these days about who gets charged for what. So it's nice to have friends in politics. There's nothing new, no matter who's in office. But I would be very wary of this. Now, it may not be today, it may be 6 months from now, but just be aware that one day you could wake up with the same kind of Wells notice that Qualcomm got last night. And I just, from the things I see, like I said, in ad world and some of the other advertising spaces, these people are highly dubious about a lot of the claims that Facebook makes. Now, some of these other companies that Facebook has bought, maybe they'll turn out to be huge. But kind of hard to say that Facebook's core business is getting better. In my opinion, it's actually getting worse, and that is the amount of people that actually use it. A lot of people have turned it off, and if you look at places like England, where they're down 50% from the highs of people using Facebook, I think we've seen the high watermark in this company. It's just how much money they can get out of the existing customers that matters more than anything. But I would be very wary of it until some of these issues, I think, are coming out. Okay, what else do we have here? Oh, just about to break. Coal. Well, Toll Brothers chart. We will talk about that when we get back. And that is Brent from Martinez, California. Be glad to talk about Toll Brothers. Certainly the numbers are kind of bouncing around. But when we look at DAH Horton out here, a lot of shorts in these stocks, and I think they bounced fairly well because of that. But this thing basically is back at support, and we'll take a closer look at it when we come back.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Join Andy Hecht as he teaches you how to make money in commodities. The Commodities Hour, next on TFNN.
If you didn't catch us a Tuesday, we've got Andy Hecht coming up here in just a minute. But they were talking about the huge lime problem and the lime shortage. And we were talking about how I liked sherbet. And again, I couldn't find any sorbet. But I did go out and buy some lime sherbet now and got in before the huge lime problem and my lime sherbet not being available for the summer. So I bought a few tubs of it today. And, it's so tasty, especially down here in Florida. Good lime. Anyway. We've got 60 S&P stocks before the end of the day are going to have reported in the S&P 500. So we still have a long ways to go. Now, today's far from over. We've got a market that's basically 2 points up, so I'm going to call it flat. We've got 2.3 billion shares. So volume, again, toward the end of the day has gone very, very light, probably going to do 3.2 billion shares for the day. And even though we got up to this high today, if we would have had 5 billion shares, I think you could make an excellent case that today's high or maybe even the past highs get tested again. But once again, we've got extremely light volume up at these highs, and you have to be very worried about it. I haven't traded in and out of my positions, mostly because I thought that you could get just absolutely chopped to death on these. And some of these are back, well, at least a couple of them I have are moving well back toward the range of the lows of the last few days. And even some of the stocks they tried to game on us in the last day or two in the portfolios are well back in the trading range. So I think I'll be willing to sit on my hands yet for a little while longer on these short positions. Actually not doing too badly. Anyway, we're talking about housing, and of course numbers came out. Now, one of the things you should know is these things are bouncing around quite violently on the housing numbers. And what we saw was basically good housing numbers, and of course got a decent bounce today in toll, but most of it is D.H. Horton, I think, that actually reported. You've got some decent volume here today. I can't see that there's going to be a whole lot of downside from Toll Brothers. But the problem is going to be, are you betting on a higher market here? I am not. So if you are bullish, I think you could take a hit here with the Toll and try maybe for 1900 on the S&P cash. I think that you've got a 20% chance of 1900 being tested before we get 1810 tested, which I think is probably an 80% chance now. So I wouldn't be probably long much of anything, including gold here, but I've been saying that for a while, so nothing new. But I'm more than willing to sit on my short positions, thinking that the big money is going to be yet again on the next huge move down, and that we couldn't rally with everything going for us with even the little bit of Ukraine news, I think shows you how weak that market was to begin with. Anyway, looking forward to what Andy has to say. I'm kind of thinking that there's so much money to be made short that I'm not really looking that hard at gold here, but maybe he's got a much better view of gold than I do. I'll have to tell you I haven't spent as much time as Tom or probably Andy on it, but I'd still want it down at about 1175, and we'll buy it if it gets down there. Anyway, we've got DeJaws, the man from commodities, and maybe he'll tell us why copper's up there a little bit today. Anyway, remind you to sell what you can when you have to, and see you tomorrow, same bat channel, same bat time.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.